Hello everyone, and I hope that you've all had a good week. In this video, I'm going to be talking about credit scoring, and we're going to look at what a credit score actually is, why it's so important when you're making a mortgage application, what things can make your credit score low, and also all the things that can make your credit score high. So firstly, what even is a credit score? A credit score is a number given by a credit agency that represents the likelihood of you defaulting on a credit account. So the higher your credit score, in the credit agency's eyes, the less likely you are to miss a payment on something. So something which is important to know is that not all lenders will credit score you, but all lenders will credit search you. And what I'm going to do is explain the differences between credit searching and credit scoring. A credit search involves looking at your credit file in its entirety, in particular looking at your management of credit accounts to see if you've maintained those credits well or if you've missed payments on things. If you have missed payments on things, it doesn't mean that you can't get a mortgage, it just may mean that you're more restricted in terms of which lenders will consider you. In contrast, with credit scoring, they're interested in the number that shows on your credit file. So when you're getting credit scored by a lender, if your credit score number falls below their internal pass mark, you'll get declined. If it's above it, you'll be accepted as long as you also pass the credit search. Credit scoring can be really frustrating because lenders don't publicise what their credit score pass marks are. They can alter this at their discretion, and at times when they want to be taking on loads of new business, they can lower the pass marks, and at times when they want to be more picky with what they're taking on, they can increase the pass marks. If you have got a low credit score, don't panic. It doesn't mean that you can't get a mortgage. And just to give you a bit more confidence with this, there are smaller building societies that won't even credit score you. They will just do a credit search. And what that means, it means that as long as your credit history in general is good and it meets their policy, they will still consider you for a mortgage, even if you've got a very low credit score. So next, we're going to be looking at all the things that can make your credit score low, and also all of the things that you can be doing to make your credit score as high as possible. Number one, don't miss any payments. And you're going to be hearing that thinking, Jordan, you're pointing out the blooming obvious. And yes, I am pointing out the blooming obvious. Just be so careful with not missing payments and be extra vigilant with your banking and checking your credit file. All it takes is one cock up, and that one cock up can impact you in getting a mortgage and can mean that you're paying a much higher rate than you would do otherwise. Number two, be wary of financial associations. Financial associations happen when someone takes out a joint credit commitment with someone else. This is a very common thing because people will always take out loans, credit cards, car finance with loved ones, family members, friends. But be very careful with who you do this with, because if that person that you're going into the financial contract with has got adverse credit or a low credit score, that can also impact your credit score by being financially aligned with that person. Number three, price comparison websites. Be very wary of them. Price comparison websites are the absolute bane of my existence. They really annoy me because they can be so detrimental when you're taking out a mortgage. And don't get me wrong, they're very good for when you're trying to get the best deal on something, but they can have a very negative effect on your credit score. And the reason why is you go on a price comparison website, you put in your details looking for something like car insurance, and every single provider that comes up with a quotation, they will all carry out their own independent credit search on you. And if you've had 30 different quotations come up, you've been credit searched 30 different times in a very short duration. And that can have a profound effect on your credit score, and it can potentially impact you in getting a mortgage. Number four, a lack of credit can lower your credit score because you can't have a credit history without actually having a credit history. If you've never taken out any credit agreements in the past, you're going to have very little information that shows on your credit file. And from that, it's very difficult to ascertain if you're a good payer of debt, and that's why it can impact your credit score. One of the best things that you can do is take out some sort of very small credit commitment. So most commonly that would be a credit card. Put a little bit of money on it every single month and just pay it off, and that will massively boost your credit score. This comes with a warning. You need to be very careful about when you take out unsecured debts. So don't use and abuse it. If you've got a credit card, don't have yourself right up to the balances or anything like that. I'm saying just put a little bit on it every single month, pay it off, and that will definitely help your credit score. Number five, over-indebtedness. Over-indebtedness can lower your credit score, so be very careful of this. As I said previously, there is nothing wrong with taking out credit as long as it's well maintained and as long as you don't use and abuse it. But if you have too much credit, that can lower your credit score. And what I mean by that is if you've got credit cards and you're very close to your limits on them, if you've got an overdraft and you're heavily into that all the time, if you've got loads of loans and car finances and your outgoings for unsecured debt or secured debt are very high, that can lower your credit score. And the reason for that is from a credit agency's perspective or from a lender's perspective, They will look at your credit usage, and if it's very, very high, they'll think, is that person living beyond their means? And if that person is living beyond their means, can they honestly afford a mortgage? Number 6, get yourself on the voters roll. Not being on the voters roll, that will lower your credit score. Being on the voters roll, that will increase your credit score. Even if you don't want to vote, get yourself on the voters roll anyway, because as I said, that will increase your credit score. Thank you very much for watching, and I hope that you enjoyed the video or found it helpful. As always, I'm going to put my contact details in the comment section below. So if you've got any questions or if there's anything you want to run by me, feel free to get in touch anytime. And yeah, have a great week, and I will see you on the next video.